You saved your down payment, you got pre-approved, you found the perfect home, and then someone tells you that you need an additional $20,000 to $40,000 in cash that nobody warned you about. Closing costs, taxes, fees, insurance, pre-inspections, appraisals, and that's before you even move in. If you're buying in New York City, the hidden costs are unlike anywhere else in the country. Today, I'm going to show you every single one so that you are not blindsided. I'm Joseph with the Bridge and Boro Team at Real Broker. I work with first-time buyers across Staten Island, Brooklyn, all over the city, and I can tell you that the most stressful moment in the buying process isn't finding the right home. It's up there, but the biggest one is it's not even negotiating the price. It's when the buyer sees the closing cost estimate for the first time. In New York City, closing costs for buyers are significantly higher than the national average. We have taxes that other cities don't have. We have fees that other states don't charge, and if nobody explains these costs up front, they hit like a freight train. I make it a point to walk every buyer through these numbers before they even start looking at homes, because knowing the real total cost, not just the down payment, is how you actually budget correctly. I've created a free New York City buyer cost breakdown guide that lists every cost, the typical range, and when it's due. You can use it to build your real budget. Link is in the description and pinned comment below. Make sure you take advantage. It's free. Why not use it? First is your big picture. Buyer closing costs in New York City typically range 3 to 6% of the purchase price, right? $600,000 home, that's $18,000 to $36,000 on top of your down payment. Nationally, buyer closing costs average about 2 to 3%, but New York City is roughly double. Why? 2 words: mortgage recording tax. That alone accounts for a huge portion of the difference. Let's break down every major cost. So again, this is the big one, the costs that make people's eyes go wide. New York City charges a mortgage recording tax on every new residential mortgage. For loans under $500,000, the rate is 8% of the loan amount. For loans of $500,000 and above, 0.925%. So let me put that into real numbers for you. If you're taking out a $480,000 mortgage to buy a $600,000 home with 20% down, your mortgage recording tax is $8,600, nearly $9,000 in taxes just for this one line item, just for the privilege of recording your mortgage with the city. This tax does not exist in most other states. It's unique to New York, and it's one of the biggest reasons that closing costs are so high. One important note is that if you're buying a co-op, you typically don't pay mortgage recording tax because co-op financing is structured as a personal loan secured by shares, not a mortgage on real property. So this is one of the few cost advantages that co-ops have over houses and condos. Despite its name, the mansion tax has nothing to do with mansions. It kicks in at $1 million, which New York City, that's barely buying you a 2-bedroom in many Brooklyn neighborhoods. If your purchase price is $1 million or above, you pay the mansion tax. The rate starts at 1% and scales up from there. 1% from $1 million to $2 million, 1.25% from $2 to $3 million, 1.5% from $3 to $5 million, and it goes even higher above that. So on a $1.2 million Brooklyn condo, the mansion tax is $12,000. Here's the trap. The tax applies to the full purchase price, not just the amount over $1 million. So the difference between buying at $999,000 and $1 million and one is $10,000 in mansion tax because of that $2. If you're shopping near that threshold, this is a critical number to negotiate around. Title insurance protects you and your lender against defects in the property's title, things like unknown liens, disputed ownership, recording errors, or fraud. In New York, rates are set by the state and are based on the purchase price. So for a $600,000 purchase, expect to pay about $3,500 to $4,000 for owners and lenders' title insurance combined. Attorney fees for the buyer range from $1,500 to $4,000 I've seen. In New York, having an attorney is standard practice for both sides of the transaction. Your attorney reviews the contract, conducts due diligence, handles title issues, and represents you at closing. Some buyers ask if they could skip the attorney to save money, especially if they're from another state. My strong recommendation is no. The contract review alone protects you from issues that could cost tens of thousands. This is not the place to cut that $1,500. It's just not the place. Now, before you even get to the closing table, there's costs you'll pay out of pocket during the process. Home inspection, $400 to $700 for a standard single-family home, more for larger or older properties. I always recommend getting an inspection, even on new construction. You'd be very surprised. The few $100s of cost has saved my clients tens of thousands in hidden problems. Appraisal could be $500 to $1,000, required by your lender. This is typically paid upfront or rolled into your closing costs. Specialty inspections if needed, maybe a termite inspection that's not included with the home inspection, radon testing, sewer scope. You can get all these kinds of things. They're not always necessary, but your inspector or attorney may recommend them based on what they find. Mortgage application and processing fees vary by lender, but typically add another $1,000 to $1,500. Bank appraisal, credit report, flood certification fees, that's another maybe $300 to $500 combined. If you're buying a co-op or a condo, there's building specific costs that house buyers don't face. Co-op buyers, your board application fee could be $500 to $1,000. The managing agent may charge a processing fee of another $500 to $750. Some buildings charge a credit check, a background check, and then there's usually a move-in deposit, refundable, of $500 to $2,000. Even if it's refundable, up front, you got to come up with that. Condo buyers are facing similar but generally lower building fees, a move-in deposit, a working capital fund contribution, which is typically 1 to 2 months of common charges as a one-time payment, and possibly a building attorney review fee. Plus, you might have to buy the prospectus and all these items related to the HOA and everything else. These costs are relatively small compared to closing costs, but they add up and they're easy to forget in your budget. So here's the category that nobody puts in the budget: the costs that hit after you close. Even a move-in ready home needs things. New locks, rekeying, that could be $200 to $500. Cleaning, either professional or supplies, $200 to $500. Window treatments for the entire home, unless you want to be woken up by the sun every single morning at 6 a.m. 7 a.m., right? That could be $1,000 to $4,000. Curtains, blinds, shades for every single window, right? The previous owner most likely took theirs. So also think about it. If we're currently working together to buy you something, maybe we negotiate those into the cost of the house. But don't forget minor repairs, touch-ups that weren't worth negotiating in the deal, but they need doing, right? Maybe $500 to $2,000. Maybe it's a leaky faucet, a running toilet, some touch-up paint, cabinet hardware, appliance replacements. The dishwasher the inspector said was functional, but is clearly on its last leg. That could be $800. The dryer that's rattling and driving you nuts after a week, you can't do it anymore, maybe it's $600. Lawn and garden equipment if you bought a house, mower, trimmer, basic tools, garden hose, that could be $500 to $1,000 if you don't already own them. Furniture for rooms that you didn't have in your apartment. If you went from a 1-bedroom apartment or a studio, God forbid, to a 3-bedroom house, many first-time buyers are going to that size, and then it's like, holy crap, I need a dining room, a guest room, a nursery, a second room, whatever. Budget $3,000 to $10,000 for the first 90 days. It's real money, and it comes right after you just spent everything on closing. So let me add it all up for a buyer purchasing a $600,000 home with 10% down. So your down payment, easy, right? 10% is $60,000. Closing costs at, let's just say 4%, including the mortgage recording tax and all that stuff, $24,000. Pre-closing costs, inspections and appraisal, maybe $1,500. Co-op or condo building fees, if applicable, let's just call it $2,000. First 90 days post-move, $5,000. Emergency reserves to put 3 to 6 months of expenses aside, $15,000. Total cash needed, approximately $107,500. Your down payment is only 56% of the total cash you need. The other 44% is costs that many buyers don't account for until they're scrambling, unless you're watching my videos. So does this mean that you need $107,000 in cash to buy a $600,000 home? In a perfect world, yes. Now there are ways to reduce this: down payment assistance programs, grants, seller concessions toward closing costs, lender credits in exchange for a slightly higher rate, gifts from family, of course. The key is knowing the full numbers so that you can plan accordingly. I know these numbers can feel overwhelming, especially if you're a first-time buyer, but here's the thing. Every single person who has ever bought a home in New York City has dealt with these same costs. The ones who had a good experience are the ones who knew about them in advance and planned accordingly. Free cost breakdown, again, giving it to you for free. It's in the description and the pinned comment below. Use it to build your real budget. And if you want a personalized estimate based on the price range and neighborhoods that you're targeting, book a free consultation. I'll walk you through every number so there are no surprises. I'm Joseph with the Bridge and Boro Team. Subscribe for more real, honest talk about buying and selling houses in New York City.